Hi, this is Ellen Stewart with ES Property Management, and I am here to talk to Terry Cleveland, who is an expert in the insurance companies, and she is to talk to us about insurance for investment property here in Indiana. Terry?
Thank you. I'm Terry Cleveland. I work with Morgan Insurance Group. Basically, we have a property casualty line for both auto, home, commercial, investment properties, and contractors.
One of the things that was really great about speaking with Terry is that she's been in this business for over 40 years and been high up in helping to write some of the laws for insurance and how that plays out here in Indiana. Every state is a little different, and every company doesn't necessarily work in every state of the United States. So if you're an owner and you live in one state, who you normally work with insurance may not work here. So, and the policies are different in what they cover and how that. So you want to make sure that wherever your investment property is that you're working with a company that can handle that investment.
Correct.
So can you talk to us today a little bit about what kind of policy an investor would want to have on their home?
Sure. An investment portfolio, first of all, can be insured one of two ways. It can be in an individual name, or it can be spun off into an LLC or a corporation. That separates an investment from personal assets, gives you another layer of protection for legal liability. So we would hope that if it were in an LLC, that it would stop at the LLC level if it's done properly. So that would be the first thing that someone would want to look at, is how am I structured in my company for all of my assets that I have. The second thing that you want to look at is, the company itself. Not every company writes in every state. Not every company writes every product in every state. So when you're going to look at it, or if we're looking at just a part of something, we have to ask a lot of questions to kind of make sure we're trying to protect as much of your asset liability that we can. So we ask a lot of questions, and sometimes they're repetitive. People get a little upset because it's a lot of information. But when they go to insure it, we pick a company, and there again, we have to deal with the hand that we're given and the coverages that we have available to the agency. Most companies do not write a fire policy, which is for rental properties or investment properties, without writing an auto and home. There are a few that do. So we have to make sure that we have photographs and that it's updated properly. But then when they go to pick the coverage, there's three coverages that they can pick from. There's a basic, a bare bones. There's a broad form, an intermediate coverage, and then there's a special, which is basically all risk with a few exceptions.
Okay.
So we try to get it in that special, but it means that it has to be insured at its replacement cost. A lot of people are buying, because of the marketplace right now, buying low, but the replacement cost may be twice what they're buying it for.
3 times, right.
Or more. So in order to get that special, you might buy it for $100, but it may have to be insured at $200 because that's what it takes to build it back. And I've never seen anyone who wants half of a building back if they have a claim. So that's why we stress for that particular policy. But there are some instances, because of the age or because it's not updated properly, we have to go to one of the other two forms. But we always tell the people that's what you have to do. And then they have to pick a deductible. The higher the deductible that they pick, the lower the premium. That's correct.
Okay. Then tell me a little bit, do you recommended liability coverage or recommended medical or things like that they might want to know to make sure is included on their policies?
We try to get to know and tell people, because we don't know what your assets are. We don't know how much you're worth. We try to get the individuals, we tell them, protect your assets. Whatever they are, protect. What do you have to lose?
Okay.
Because in a lawsuit, you don't know how big it's going to be.
Okay.
Or now how deep it's going to go into your pocket. So we say, whatever that amount is, that's what we need to do. So from a liability standpoint on the fire policy or the rental policy for the owner, they can buy some liability. A lot of times the $500,000 is the most you can buy with some companies. There's a few that'll go with $1 million. But sometimes that's not enough. So then we have to go and do something different with it and make some arrangements. We either have to write another type of a liability policy, or if they have an umbrella policy themselves, if that company will let them add them to that umbrella.
Okay, because we had talked a little bit before at one time about umbrella policies and how, depending on what company it's with and whether you've added that particular property to it, whether it's actually going to fit into that umbrella policy. policy that they
Right.
already have. Because
Right.
they'll say, hey, I might have $5 million in assets, but I have an umbrella policy that handles that $5 million. And so their liability that they'll want to do on the house is maybe $300,000 or, right in that range, and have it be less so that their premium is less. But is that they'll need to check and make sure?
They'll have to check with the company that writes their umbrella. And that company will say, yes, I will write over this company, or no, I will not. And they'll say, we need a minimum of $500,000 or $300,000, and then we'll add that property, but you have to call the agent and tell them that you have this property, who the company is with, and then they will tell you whether they'll cover it or not.
Okay.
So it's a back and forth thing. It's just not an all-inclusive. When people think, I have an umbrella, they think, oh, everything I do is covered, or everything I have is covered, and it isn't. You have to specify what you have to cover, and the company has to charge a premium for each and every item that they cover. So if you have rental properties, they'll charge you so much per property, and depending on the liability limit on the umbrella, it can be anywhere from $20 a year to $100 a year.
Per property.
Per property.
Okay. But still, that's such a great...
That's a great... But
it's an inexpensive...
That's correct.
Right.
And we always put the liability on that rental property as well, so
Right.
that we're covering the front line of it. But
Okay.
you just don't want a gap between your underlying that we might sell or some other agent might sell you and that umbrella. Because if you
Okay.
have $300,000 and the company says we need $500,000, you've got a $200,000 deductible.
Got it.
And you don't want that. You want to make sure you have a zero deductible in there. So, and as long as it's covered and you've discussed it with your other company, that should be fine.
Tell us a little bit about the difference between out of state, like someone who is an owner, they live out of state, so their personal property, their personal home is in some other state here in the United States, or even a foreign investor,
Right.
and then they have property here in Indiana. What kind of a difference is that for them?
If we know and if we represent the company that they write their homeowners with, and if that company writes in the state, we can always try to get to that company and keep it all together. But if the company does not write across state lines, which most do not, there are very, very few companies that will write in every state. So you end up having to kind of put things together, and we try to put that together the best we can. And we put as high a liability limit as we can get on it. If it's insured as a LLC or a corporation, we can then do a commercial side of it and get it more liability on a general liability and put another umbrella layer on top of that.
Okay.
So that tends to be what we're beginning to see a little bit, people who are buying multiples.
Right.
Because it puts everything under one LLC or one corporation, and then we insure it that way, and then you can do a little bit different with it. But it depends on the company again as to how they treat that.
Okay.
That entity, because some will still put it on a personal policy, some will put it on a commercial policy.
Right.
So it's like you give us a hand, we play with the hand we're dealt with. Every instance is totally different.
Now, there's also a difference between if you have a single family home versus you have you have a condo or a townhome, which is part of an HOA.
Correct.
So also is to pay attention to those type of policies, and what does
Correct.
the master policy cover completely, and when does the homeowner's policy kick in?
Anytime there's a master policy on a condo or any type of condo, apartment condo or townhome, we have to know that. That's not something that we know or that we can find out as if there's a master policy. But you always want a copy of that master policy. We'll look at it and we'll tell you what it says based on our interpretation of the coverages that we need.
Right.
Because if there's a claim on that policy that we write for that fire policy for that owner, the
Right.
first thing the companies want to see is, we need a copy of your master policy. You might as well have it on the front end, because they're
Right.
going to want to see it if you have a claim. Because the two dovetail. They don't exactly say we stop here and cover there.
Right.
They start where the other one stops.
Okay.
And that's the way the policies are generally worded. So most of them are going to say drywall in, that if it's an HOA that you have to buy your inside. Most of it's drywall in, which is going to pick up your flooring, your lighting, your electrical, your plumbing. So it can be a little bit or it can be a lot.
Okay.
Depends on what kind of finishes you have on the inside. But we need to know that, so we put the proper coverage on it.
Right, because some of them even don't cover, like we'll do drywall in, but also you also have to do your own doors, your own
That's
windows.
correct. That's
Some
correct.
some do them, some
Some
don't.
don't.
Some
And
skylights,
there's
some
no
don't.
no
So
two the
there's
same.
Yeah, so you really want to make sure
Right.
that you know what those are.
That's
So,
correct. And we'll take a look at it
Okay,
if somebody wants us to.
great. Well, thank you so much for your time,
Thank
Terry.
you very much.
Really appreciate it. So this is ES Property Management, and we hope this video has been helpful for you. Thank you.